Lots of times when I'm meeting with clients or potential clients and they come to me and I ask them, how are they taxed? And they are typically an LLC and they're taxed as an S corporation. And I'll ask them, I'll say, okay, why are you taxed as an S corporation? Do you understand why you're taxed as a corporation? And what I find is most of them have no clue as to why they're actually taxed as an S corporation. Most often they're taxed as an S corporation because that's how all their friends told them they should be taxed. That's what their CPA said they should be doing, but they don't really have an understanding as to what the benefits of being taxed as an S corporation are. So we're going to take a few minutes and we're going to talk about why most CPAs would recommend that you're taxed as an S corporation. An S corporation is a flow-through entity that's created by the state, but then you make an election with the IRS to be taxed that way. The biggest benefits in being taxed as an S corporation is the fact that you basically divide your income into two pots. One pot is going to be called payroll and you will receive income on a W-2. The other pot we're going to call distributions, and that income is going to flow through to you on what's called a Schedule K-1 from your S corporation. The biggest benefit to an S corporation is that we only have to pay payroll taxes on the pot that's in payroll. The pot that we will still be paying income taxes on that is in distributions, we don't have to pay payroll taxes on. This saves us quite a bit of money, 3% most of the time. It could be as much as 15% in the early years on the payroll taxes that would be related to the distributions. So the logical question is, well, if I don't have to pay payroll taxes on the distribution and it's all money coming out of the S-Corp and I'm going to pay income tax on the whole amount, why would I take any of it out as payroll? The IRS requires that you pay yourself what's called reasonable compensation. The way that's determined is sort of looking at other professionals in your industry and seeing what they're paying themselves or what they're making, and that amount has to come out to you on a W-2. The remainder can come out as distributions not subject to payroll taxes. From a personal perspective, I also think it's a little bit cleaner to have the entity taxed completely separate from you personally. If you have any questions about this or other topics, feel free to email questions@mydentalcpa.com.